Good morning. Just realized I forgot to turn my phone off as it's beeping, so good timing, I guess. Can y'all hear me loud and clear? Let me get that shut off real quick. There we go. All right, it should be good. There, in case something crazy happens. Well, good morning. Good morning. Awesome. Thanks, Stephanie. Thanks, Lee. Loud and clear. Remember to unmute the mic. How's the trade day treating you? It's good and bad for me. It's awful, actually. I'll show you. It's funny actually. What we're going to talk about today, it's working out beautifully for a lesson, which hopefully most of you have learned. But and hopefully this is just reiterating some stuff. And maybe there's just a little nugget for some of you. But we'll have some fun either way. But let's get the disclaimer out of the way. After some coffee. I'm not a registered broker deal investment advisor. I'm not going to give you any recommendations or advice. Everything that we do here is purely for educational purposes. If I do happen to mention a trade, just assume it is a paper trade or practice trade. For regulatory reasons, we do not discuss funded trading. Cat hairs all over my camera. She's here somewhere. She'll probably get crazy. So here's what's coming up. Hello, Helen, and Stephanie. Good to see you all. So the premium online workshops, Inner Circle is the 15th at 7, 22nd at 7. The quarterly one is the 19th and 20th at 10 a.m. Eastern Time. Mastermind group, April 16th and 23rd, 8 o'clock Eastern. Trading You is the 18th and the 30th at 8 o'clock. I think I'm doing the 18th, the one on the 18th, if I remember right. Monster Market Movers, April 23rd. And then the free online workshops, course Power Hour every Monday. And this one here, Trading Coaches Playbooks, every Friday at noon Eastern Time. And then the Power Option plays Monday and Thursday. Cover the Call Explorer Thursday with Trip. And then Brandon's E-Mini Think Tank Monday, Wednesday, and Thursday. So little lighter schedule than normal, it looks like to me. Coming into the summer, right? Of course, you can find us on all the social media places. Where's Truth at? I just noticed that's not on there. I haven't paid attention, but I got on there for a little bit and it was interesting, but we don't like to change, right? And I'm on YouTube a lot, even though it's kind of a love-hate thing, and I played with the Truth Social some, and I am debating whether to get back on Twitter. I've never really spent a lot of time. In fact, I really never even wanted to be on social media. I got on Facebook years ago. Another company we worked with, they started a Facebook page when it was kind of new, and they said, you need to get on, like our page. So I got on, liked our page, and then all of a sudden people started finding me, and it was like, I don't, I'm not a huge fan of it, but I spend a little bit of time on there now and then, but it is kind of fun though. So I get in a little debates with people. So, but it's fun to stay connected with the family too and see what's going on with them, which is that's been probably the greatest blessing of Facebook, even though the rest of it's kind of trash. But if we haven't met, I've got 3 different tools. Actually, the 4th one coming out here pretty soon. But Patterns of Flash is a tool I created years ago, actually, out of my own frustration of not being able to recognize the patterns on the right side of the chart. And so I created that tool as a mechanism to train myself to be able to see the patterns on the right side of the chart, so that as they're forming, then I can take advantage of them before they played out, because that was the part that happened. I started learning about patterns, seeing them. I'd recognize them in the chart, but it was in the middle of the chart. And there were often times where they'd played out beautifully, and it's like, I can't take advantage of it now. It's already gone. So out of my frustration, I created this tool for myself to, like I said, train my eyes. And then as I built it out as a tool for others, I realized that, because originally it was just the flashcard section, which, right, you just sit and hit the space bar and it just pops patterns in front of your eyes, and you just like math, right? 2 + 4 is 6. And then I realized that it doesn't do you any good if you recognize the pattern. So you can use the training tool and learn to see them. But once you see them, what do you do with them? And at that point, and that's part of the reason I didn't think about it, I'd already read all the books. I understood what to do with the patterns. But somebody that's new, that doesn't understand patterns, will need to know how. So out of that came about 8 hours of video in there explaining each pattern, the concept of the pattern, what to look for, what makes it stronger, what makes it weaker, and how to potentially trade it. So that's what that is. Weekly Whispers um, is there a trial on it still? Not for you. You don't get a trial on anything, do you? I'm just kidding. Yeah, there is. Yeah, and Lee just put it in there, so thank you. Lee, there's a link in there. So if you are new and you haven't used my Patterns in Flash, you do get a free 2-week trial. You do the same thing with the Weekly Whispers. That's something we launched, what, a year and a half ago, I think it was, the beginning of last year. It's basically just me. I go in and do my research every Thursday afternoon after the market closes, or when I get up charts updated, when I do my research and look for candidates. I go through looking about 300 to 400 charts, looking for patterns, and I narrow that down to 20 to 30 candidates, the best of the best. I'm looking for the nicest, best looking patterns, and then that's all I watch for the week. So we just started. I just started basically putting on video, recording my analysis, what I'm looking at, what I'm thinking, what my thought process is. Here's what I see in the overall market. Here's the news we're watching out for, and here's my candidates. I also do a review of the previous week, so we can learn if we made a mistake or did something, or something happens that we haven't seen before. We can learn from it, right? So that's essentially what it is. It's I usually do about an hour and a half on Thursdays. Every Tuesday I do a midweek update. It's usually 30 to 45 minutes. Just going back and looking at the candidates for the week and kind of rehashing and looking and seeing what's happened, what's changed, if we're moving stops. So yeah, I mean, that's just me basically talking like I am now about what I'm trading, what I'm looking at, my own research. So, and the small account big returns is an on-demand class that I did, I don't know, a year or two ago, I think. So if you're working with a smaller amount, that's essentially, it's a good pre-recorded class you can go watch. So talking about how to take a small account and create a bigger account with it. But here's what we're going to talk about today. Appreciate that, Will. Will's good videos on Weekly Whispers. Even when I find the squirrels. You haven't noticed I'm a little ADD, so I find squirrels now and then. But it's, I've been at this for 24, going on 25 years, and I've had a lot of unique and interesting experiences, and sometimes they take me to a thought, and if I think it's worth sharing, I'm gonna put some time into sharing my experiences and what I see. So that's essentially what I'm gonna do here today, and then we'll go back and look at charts then. I love it. Bill, everybody needs to invest in a BB gun then. Will says I own a BB gun so I can get the squirrels and chase them out, which is good. I've been meaning to ask somebody, does the player, and I already talk fast if you haven't noticed. That's one reason I like YouTube, is I can speed up I go to the settings and hit playback speed. I can speed it up. So there's the guys that don't talk very fast, I'll put on double speed, so I can watch twice as much material in half the time. And some guys like Ben Shapiro that talk really fast, I put on 1.5 speed. So I can take in more information with less time. That's one reason I like YouTube. I don't know if ours does that or not, if you have a speed up, but I probably talk too fast as it is. So I have to work hard to slow down and make sure I enunciate. So that's why I reference back to last night. That's one thing. I'm glad you said that. One thing that comes with either one of those tools is once a quarter we do a live class. We just did it last night. We do a live class for anybody that's a subscriber to Patterns in Flash or Weekly Whispers. So once a quarter we get together live and basically talk about whatever we want, whatever I want. But we left it open last night. We just had some fun. So, but we're going to talk today about bouncing back from defeat. And there's a question that you probably have all read already, and what is the answer to that is the question. That's definitely good advice, Trip. Don't quit. Never, 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 never give up. And that is probably one of the best pieces of advice for trading, because you are going to experience some rather wild roller coaster rides, most likely. If you're new to trading, the one thing you will learn very quickly is it's not easy. It is, in my opinion, I've said this many times over the last couple of decades, it is one of the most challenging things you will ever attempt to succeed at. And it really is. And I talk a lot about, and baseball is one of those things I refer to quite often. which is supposed to go to a baseball game tonight, but I don't think that's going to happen now. I got some tickets, but I was supposed to. My neighbor and I were supposed to go, but his wife's having back problems or something like that. So, but baseball is a great one because not only is almost everybody familiar with it, but batting especially is a great reference to trading. So I use that quite often. But what makes the amateurs different from the pros? What takes somebody from, they start out in Little League as a little kid, then you work at it, and you got the amateurs, right? You got the minor leagues, which is actually the game I'm supposed to go to tonight. It's the Rainiers. I got there's a real estate agent I know that gets a whole bunch of tickets once or twice a year, and he gives them out. So he gave me some, and I wanted to go. I might still go if I can find somebody else to go with me, but my brother can't. So I don't know. I got a few other friends around here I might ask, but most of the time they're busy. So if anybody's in the Seattle area, you want 4 tickets to the Rainiers game, let me know. So I got them. But all good answers. I like it. Practice. It's pouring. Yeah, I know. It's a little bit cloudy here, which is not unusual. I don't know if it's going to rain tonight or not. I didn't even look up the weather. There's the big thing right there. Those that go from the minors to the big leagues, the differentiator is mindset, right? Is what do they think and how do they think? Number one is their expectations. A lot of times amateurs come in, they're like, hey, my goal this year is to hit 1,000. If you're not a baseball fan, that means you get a hit every single at bat. Now, those of you that understand baseball, even at a basic level, know that that's not realistic. When you come in with unrealistic expectations, you set yourself up for failure because you go in with this idea that you're gonna hit these magical, crazy numbers that have never happened in the history of man, but somehow you're going to do it. It's just not realistic, right? You're not going to bat 1,000. Okay? And in trading, you don't need to. That's the beauty of it. It's really not. And that's one of the reasons I like baseball, especially batting, is because it's very similar, especially for my trading style. If we haven't met, I'm a directional trader. I buy calls and puts. That's 99% of my trading. I occasionally will do a spread. I don't really own. I own a couple of stocks that are, they're not really even long term. They're just not long term holds like retirement holds, but I'm holding on to them until they are profitable. But I only have a couple. So, and they're not, and actually they're short ETFs. So I'm waiting for the market to drop. And if they don't, it's not a big deal. So, where was I going with that? See, I already found a squirrel. Not even found a squirrel, actually. I think I need to be on the ballot. I'm going to be the president. Expectations. Oh, baseball. I was on baseball, batting. You really don't. Oh, that's what I was talking about. My trading style is if I'm hitting 30 to 40%, I'm good. And a lot of people are like, that's crazy. You can't make money if you're not making money on at least half the trades. And that's not true. If you believe that, then go get Patterns and Flash, get the trial, go take the go do the risk reward section, and you'll see that it's not accurate. Because the one thing I always ask people is, how many of you would love to have a 90%, 95% success rate, right? On 95 trades, you make money. You only lose on 5. And usually when people don't understand that that's a trick question, they go, yeah, I love that. I'd love to be 95%. In other words, they have this expectation that's not real, right? But 95% success rate, you make $1 on those each. So you made $95. But on those 5 trades you lost on, you lose $100 each. You lost 500, you made 95. You're down $405, right? So it's not about your winning percentage. It's about the size of the trades that you do win on and the size of the trades that you lose on. If you use a 3-to-1 risk reward ratio, if you have $3 of upside for each trade you put on and only $1 of risk, go do 4 trades and have 3 of them will go against you and take a $1 stop on it. And then have 1 go in your favor, you make $3. You lost $3 on 3 different trades. You made $3 on 1 trade. You're break even, yet your batting average was only 25%. You're only at 250. So this idea, and I used to believe it. When I started, it's like, if I could just get to 70 or 80%, I'll make a fortune. If I can learn to read the charts good enough to get to a 70, 80% success rate, I'll make a killing. I'll be filthy rich. I'll be Buffett rich. Well, I was young and dumb then. I had unrealistic expectations. Not only was it unrealistic expectations, they weren't necessary expectations. And once you understand and comprehend and realize that you don't have to have a 700 or 800 batting average, you can have a 250, 300 batting average and still be fine and still make a profit. In fact, if you look at baseball players, the best of the best are at what, 280, 300? That means they only get a base hit 28, 29, 30% of the time. The best of the best in the league that go to the Hall of Fame, they have a lifetime batting average of 300. That means they only got a base hit 30% of the time. Every 10 at bats, they only got one hit every three out of 10. That doesn't sound spectacular unless you put it in the context and understand that baseball, that's the way it is. Those are some of the best. And if you are hitting that, 35, 40% in trading, you're among the best. And that's all it takes. Now, granted, that's why I was talking about my specific trading style. If you're doing spreads, you're doing covered calls, those have a different risk reward profile. So when you're talking directional type of trading, then a batting average of 250, 300, 400 is sufficient. You don't need to 700, 800, 900. And the odds are you're not going to get it anyway. Maybe for a period, but not long term. Perspective, which kind of ties into that. And I think I probably touched on that enough, but it's having a perspective of, and that's what shifted for me. And Will just said it, risk reward is a great mindset booster. When you shift your perspective and you realize that, number one, you need to have realistic expectations, which I hate the term realistic because most of us here that are looking to trade, you have expectations that most people out there in the real world would never believe. Getting 50, 100%, 200% rate of return in a year. Oh, that's not possible. You can't do that. You can't time the market. Which is partially true, but it's not 100% true. So those of us that trade, at least me, and I know some others here, our compass doesn't exactly point due north, right? You got to be a little bit off. But one thing I learned 20 some years ago when I went out sailing with the guy is that the fastest sailing point, I didn't know this because I'd never been out sailing before. The fastest way, how do you put this? The way to get the most speed is to go just 1 or 2 degrees off of directly into the wind. That's where you sail at the fastest speed. So you're literally sailing into the wind off just a little tiny bit, 1 degree, 2 degrees. I don't know what it is. Maybe some of y'all are sailors. I don't know. But I remember when he told me that, he goes, the fastest is just a little bit off directly into the wind. Because I always had the mindset, you think that sailing is, you need the wind behind you. And it's exactly the opposite. Oh, don't get me started on that. Oh, hey, the video's not up yet today, is it? So it really is, a lot of it's about perspective and learning to realize that, and like that, it was an eye-opener for me. I didn't know when it came to sailing, and sailing almost directly into the wind was the fastest way. It changed my perspective. And now all of a sudden it's like, okay. So like all options expire. Did I talk about that last night? I try to remember because after we finished last night, okay, I did, but you haven't seen it yet. After we finished the 1 hour live class last night, I did my weekly whispers video. So I think it was an hour and 25 minutes long last night, but I went into that. Will says like options expired and worthless. And this is a perspective. If you're not familiar with options trading, there's an old myth out there that says 80 to 90% of options expire worthless. And there's absolutely nothing that can be further from the truth. And all you have to do is use a little common sense, look at an option chain and realize that that doesn't make any sense whatsoever. Because no matter where the stock closes on the option chain, you got half the calls are out of the money, half the puts are out of the money. If you have half on each side, how can 80 or 90% expire worthless? And the thing that irritates me about that myth, that when people bring it up, I do everything I can to squash it. Met a guy years ago that literally spent $15,000 to $20,000 getting educated from another company that led him into selling strategies, selling naked puts, doing spreads, because 80 to 90% of options expire worthless. Therefore, the odds are on your side, so you should use this strategy. When the reality is, it's not even close to true. In fact, more than half of options expire with value. So it's less than half of options expire worthless. And that's real data from Larry McMillan himself. If you're not familiar with McMillan, He's pretty much the guru on options. He's written 2 books. He's a mathematician, and he got into trading. And he started trading listed options the way we trade them today when they came out in 1972. And he's written 2 books, maybe 3. I don't know. There's 2 main ones that he has, and they're considered the Bible of options. So yeah, and I had this gentleman show up to a preview workshop, and he was led to this myth by this other company that he spent 20 grand with. And when I showed him, I happen to have McMillan's book with me, and I showed him right there on page 20. It says right here, it's a myth. Not only that, I emailed McMillan himself, and I said, hey, is there data? I mean, I read it in your book, and I hear this all the time. Is there data to prove that? And he said, yeah, he sent me his spreadsheet he kept for like 4 or 5 years, because the SIBO wouldn't give him their raw data. But they said they told him that this is about what we have. And he went and kept it himself so he could see if it was accurate or not. And sure enough, and it's something like, I have it. I'm sure I have it here somewhere. I don't want to spend the time to dig it up, but it's something like 54% have value at expiration, 54.7 or something like that. And they estimate, they don't know for sure, but they estimate that about 10% get closed out. Because if you have options at expiration that have value, you're probably not going to exercise them, right? You just close them out and sell them. So the reality is that closer to 2/3 of options actually have value at expiration. So you got to be careful. Listen to people, but question. Don't be satisfied just taking somebody's word for it because you lend them credibility. If I say something, question what I say. I don't care. I'm all up for it. I do all the time. I don't care who you are. I'm going to question you. I don't care if you've been doing this for 500,000 years. If something doesn't make sense to me, I'm going to ask questions about it. That's just my curious nature. So I don't know. Where is she? I just saw your question, Brenda. She's not here. That's for sure. She's usually sitting up there on the router, but I think she was up there earlier this morning. She probably got cranky when I got cranky because the market was going crazy and I was getting cranky myself. I'm like, ah! She probably bailed. She was trying to bite my hand off this morning though. So, well, 80% of friends and family say stock trading is gambling. 20% want to give me money to trade for them. Yeah, my neighbor asked me that. Hey, if I give you $5 grand, will you trade for me? I'm like, no, sorry. I'm not going to do it. You want to set up your own account? You want to come over and watch? You want to, I'll help you. I'll tell you what orders, how to place your orders and what they do and how they function. I'd be happy to teach you, and you can trade your own account, but I'm not going to do it for you. No way. I've had that offer many, many times over the years, and I'm like, nope. Because despite what I know and despite my skill, that doesn't mean that I'm 100% prone from making mistakes or doing something stupid or losing your money. And I'm not going to be the one that loses your money because something goes haywire or something out of my control I can't, comes up. Yeah, you and me both, Steve. That's like a dog gets upset when he yells at the computer too. Who does that besides crazy people? See, I said we're all a little bit, we don't quite point due north. Who yells at the computer? But a lot of his thought process, right? Moving on to this, the way they process defeat, the way professionals bounce back from defeat versus amateurs, right? It's their ability to reset after you have a setback or defeat, right? So when something goes haywire and something is outside of your control, you can't do anything about, or you just make a mistake. Even after 24 years, I still do. If there's anybody here that doesn't make a mistake, start calling you Jesus, right? But we still do things, right? We succumb to emotions. The goal as a trader should be get to a point where you have less of that, right? And watch professional sports at any level, any one of them, right? There's always fights breaking out and something's happening. Somebody loses their temper. Some batter strikes out and, crushes his bat against the plate. Sometimes your emotion gets the best of you. That's called life. But the question is, how quickly can you bounce back from that? How quickly can you reset your mindset to where it needs to be so that your next at bat is possibly good? And that's really, that is, I think, the huge differentiator between amateurs and pros. Amateurs, number one, set realistic expectations. They have a different perspective than most people. They process defeat differently than most, and they can reset their mind back to a healthy place, if you will, so that they can move on and continue to play the game at the level they need to. And trading is really no different, right? And that's one thing too. And I think whatever you have to use in life, if you're not a baseball fan or you don't like baseball, you maybe don't understand baseball, find something in your life. Because I love playing poker. That was my first love that I fell in love with, was poker. And then I found trading, which they're pretty much parallels. They're the same. And that's why I was laughing at your talking about gambling. And I always ask people, say, well, that's gambling. Well, define gambling. And you know what? Everybody, I would say 95% of people, they can't even answer the question. And those that do answer it, they don't have an accurate answer for it. What is gambling? People just have this thing out there. It's just, they just say it. And it's like, this is what I'm talking about, asking questions. Like, what is the definition of gambling? And at least for me, the way I define it, which I think is a common sense definition, is it's taking a risk at uncertain odds. If I don't know what the odds are, it's just a wild-haired risk, and who knows what's going to happen, right? If I know what my odds are, if I plan to trade out and say I'm going to get in at $20, and if it hits 19, I'm going to get out, and if it goes to 25, I'm going to get out. I'm going to take my profit. I'm getting in at 20. I'm getting out at 19. I know what my risk is. I'm going to lose $1 times however many shares I do. If I do 1,000 shares, I have $1,000 of risk. I know what my risk is. That's not gambling. That's called planning. I know how much I'm willing to take a chance on it. I'm going to risk $1,000. And in the back of your mind, you have to know that, I mean, God forbid something happens and it gaps and gets worse. You know that it could be worse too, but you know what your risk is. If you know what your risk is, it's not gambling. It's saying, I'm willing to take a chance. I'm willing to step into the batter's box. I'm going to take a pitch and see if I can hit it. And guess what? If you hit it, you might make a bunch. If you don't hit it, you strike out. Okay, you go back to the dugout, grab your glove, go play defense. If you know what your risk is, it's not gambling. If you control, if you have you manage your risk and you have it under control, that's not gambling. That's saying I'm taking a risk. So. Oh, you're getting out the Hoyle's definition, or what's the other dictionary? Set of games that use a chance in how you can win. Yes. But the question becomes, if you do it over and over and over again. See, there's one thing I learned as a young man, is that because my dad played blackjack. And at 16, I started to get asked questions and got interested and curious. And he handed me a book. He said, here, read to page 200. And when you're done, let me know. And so I did. And blackjack is pure statistics. That's why I got bored with it, right? There's 52 cards in the deck. There's only so many combinations that could come up. And when you learn the odds of hitting and staying on certain types of hands, there's certain rules. That's what this book taught, was here's the rules. You never split 4s and 5s. You always split aces and 8s. If you have a soft 12 and the dealer, or you have a 12 or a 13, the dealer has a 2, you hit it. If you have a 12, the dealer has a 2, you hit it. If you have a 3 and the dealer has a 2, you stay. If you have a 15, the dealer's got anything a 6 or lower, you stay, right? There's all these rules that put the odds on your side. And if you actually play based on those rules over the long term in blackjack, you're gonna about break even with the house. And then if you learn how to count, then at least the simple counting system that we used, you had a 1.5% advantage over the house. So you have a 1.5%. So for every $100 you play, you're going to make $1.50, which doesn't sound like a lot, right? But you have an advantage over the house long term. The odds are in your favor because you have something basic that you understand how to do that. And that's the first thing I learned. And then when I turned 18, I went to this little Indian casino. They just opened up and started playing poker. And I was like, I don't know what I'm doing. I better figure it out. And I fell in love with it, right? It's all about odds. It's more in line with trading, but blackjack is a simple game that's pure math. So anyway, so find other things, whatever you have to, so you can, that you can relate to and get your mindset, because most likely most of you have overcome something in life, right? You've been through challenges. You've had things that were difficult, whether it's marriage or relationships with kids, work relationships, work in general. There's always something you can relate to and say, okay, I overcame that. I reset my expectations. I changed my perspective. I learned to process the challenges and the hurdles I had to overcome. And then you were able to reset it. So if you already have those skills in place from a different arena in life, then take those and transplant them into trading. And I do that. There's all kinds of things I'm looking at going, okay, I've had this challenge in life and I've had this, and this is how I overcame it. And this is how I bounced back from defeat. Yeah. That reminds me. My parents were up, not last week and the one before. Will says you can play until you hit a good hand and walk away. And it was weird. We went to this new casino that's been up for 2 or 3 years. I had never been there. They hadn't been there. So we went. We had some time to kill on Friday, waiting for my brother to get done with work. And they didn't have any just regular blackjack tables. They had these weird ones with all these weird side bets and all this other stuff. But my mom and I ended up sitting out at this one table. There was a couple seats. And then my dad went to a different one. And this one guy next to us, my mom, after about 20 or 30 minutes, she's like, oh, he's got like $1,500 in front of him. And we're playing with $100. I don't play big money. It's mostly for fun, and she doesn't either. Well, my dad gave her $100, so she made 150 actually. I got that with 50, but this guy next to us, he only had like $300 or $400. The next thing we knew, he's up at 12, 15, two grand, something like that. He got a whole bunch of black chips. It was like, oh, she's like, wow, he's doing well. I'm like, well, yeah, we don't know how much he started with though. Right? That's always the question. How much did you start with? Because if he started with 2 grand, he's doing terrible. But we ended up cashing out and walked away. And then my mom, for some goofy reason, if she's ahead, she'll take a little bit of her profits and go play roulette, which is the worst odds game in the casino. But she likes to do it. She puts numbers on the grandkids stuff, and sometimes she hits. But after about 10 minutes of being at the table, we hear this big, and it was right next to the blackjack table we're playing, and we hear this big old roar from over there. And I look over there, and I went over and looked. And this guy that was betting big, he threw a $500 bet out. It was his last bet. He had a whole bunch. He had a small stack of green chips, probably $300 left over. But he put this $500 bet out. He put $25 side bet on these 2 different side bets. And it was this weird game where if you get a splitting or a double down hand, they give you a free split or a free double down. And if you have this side bet and you get they throw these gold coins out there for each time you split or double down. If you get, I think it was up to 7 of them, it pays like 1,000 to 1 if you have that side bet. Well, he ends up getting 4 of these gold coins. So he splits this $500 4 times. So he's got 5 hands in play, I think, or 4 hands in play. And then he's got this side bet that is now going to pay him 60 to 1 because he has those 4 gold coins out there. So that $25 side bet made him $1,500. And then he won 3 of the 4 hands he had. So he banked $1,500 from that. So in one hand, he went from 500, and he said, that was my last hand. He banked 3 grand on that one hand. So he walked away with 3,500 to 4 grand of chips. Like you said, when you get a good hand, you walk away, and that's what he did. He was on his last hand, and he picked up all these $3,000 or $4,000 of chips and walked away. It was like, okay, he's probably ahead, but I don't know. It was cool to see, though. I don't think I've ever seen that big of a win on a blackjack table, not a $10 table. So anyway. But that's pure luck. And I'm going to show you, I'm kind of sort of kicking myself right now because I had one of those opportunities this morning, but I'm going to show you what I'm talking about. So exactly, that leads me exactly to what I have here. How do you know it's going to take place, right? Because how many of you look and say, well, oh man, if you would have just gotten in there, I should have done this, I should have done that. I could have made a fortune if I would have gotten in there. But what evidence is there to point to that, right? There's 2 critical questions to ask on each trade. Excuse me. The first one you should ask, if you get stopped out of a trade, or you get out of a trade period, even if you get out profitably, it shouldn't matter. Okay, did you make a mistake? Because I'll tell you exactly what's going to happen, and it happens the vast majority of the time. Right? You get in a trade, it goes in your favor, you get out, and guess what happens? It keeps going. And you're like, I should have stayed in. Well, did you make a mistake? Was there something else you could have done to continue to take advantage of that continued move, whatever direction you're going? Right? I mean, scaling, that's another thing. Not only risk reward is huge from a mindset perspective and controlling your fear, but if you learn to scale, then that will help, right? Because, in the old days when I started, which part of it was due to commissions, but at the same time, it was just the way we traded, is you're all in or you're all out. You go in with 5 or 10 contracts and you sell 5 or 10 contracts when it hits your target. You just get out. But then that happens. You get out and it keeps going. You're like, ah. So if you scale, if you have 10 contracts and it goes and hits your target, it gets halfway to your target, you take half of it out. And that way, if it keeps going, right, there's the solution to your fear. You're afraid it's going to keep going. And so you don't want to get out, but at the same time, you don't want to give back your profit. So if you take part of it out, you bank some of your profit, you reduce your risk, and you leave the upside still open. It's a beautiful thing. It's about managing your mindset, right? But excuse me, the question from every trade should be, did I make a mistake? Is there something I could have done differently here? And if the answer is yes, okay, I made a mistake, or I could have done something differently that would have resulted in a better profits. If you answer that question, did I do something wrong, or could I have improved it? Then learn from it and move on. Say, okay, next time in this type of situation, I'm going to do this, because every single trade is unique. Just like every at bat is unique. But if you do something, and this is another thing that differentiates between amateurs and pros, is the amateurs sit there and kick themselves and beat themselves up over the mistake instead of saying, okay, I made a mistake. Welcome to humanity. Learn from it so that the next time I'm in a similar situation, then maybe I'll handle it better. Learn from it and move on. If you didn't make a mistake, forget it. A short memory is a good thing. Because I have a lot of trades. I don't make nearly as many mistakes as I used to. But if you don't make a mistake, there's a lot of times I get into a trade and it goes against me. It stops me out. And I look at it. Did I do something wrong? Nope. The market just didn't do what I expected it to. I looked at it. I planned it. I said, here's the stop. Here's the target. Here's the entry point. And if it hits the entry point, I'll get in. I'll put the stop there. And if it hits the stop, I get out. Did I make a mistake? Nope. I had a plan. I followed the plan. Hence the reason a good trade. That's one thing I cover I think I covered that in Patterns of Flash, don't I? I know I've talked about it quite a bit, but how do you define a good trade? And this goes straight to the mindset thing. And it's one thing that a lot of people come to the market with, which I was guilty of as well. If you haven't figured out, I teach from experience, right? Is I used to think a good trade was when I made money. If I made money, it was a good trade. If I lost money, I did something wrong. That's not true. If you have a plan going into the trade and you follow that plan and the market just doesn't do what you thought it was going to do or what it looked like it was going to do, you didn't make a mistake. You didn't have a bad trade. No, something did. The market just didn't do what you thought. You stepped up to the plate. You got in the batter's box. You waited for the pitch. You swung at the pitch and you missed. All right. There's no mistake there. It just happened. It's part of the game. You strike out sometimes, maybe a lot. I was never a very good hitter. So I had one home run. That was it. After a green M&M of all things. That's a long story, but I won't go there. So one of the other things that you should do is shift your mindset from good trade, bad trade of making money versus losing money. Because I lose money all the time, and it was a good trade. I've made money before and consider it bad trades. Because if you don't follow your plan, the question should be, did you have a plan going in? And did you follow your plan? If you can answer those both yes, I had a plan going in. Yes, I followed the plan. That's a good trade. Regardless of the outcome. The outcome doesn't matter. Because if you have the odds on your side and you have a good solid plan that is statistically advantageous, then in the long run, you're going to be fine. So it's a matter of that right there, the woulda, shoulda, coulda syndrome. Redefine what a good trade is in your mind. Change your perspective, right? Like the first one we talked about is perspective and how you deal with it. And when you can look at the trade and say, okay, I had a plan. I stuck to the plan. I lost money. Whoop-de-doo-dah. Welcome to trading. That's what happens. But the woulda, coulda, shoulda, it's deadly. It will destroy your mindset if you don't learn to manage it. You're never going to get rid of it, ever. But you can manage it well. Here's what I mean. I'll show you exactly what I mean. I don't know if I can make that, see if I can make that big. I don't know if it's going to be too big though. I'll slide it over a little. So I trade futures typically in the morning, sometimes all day, depends on what's going on. So this is gold, right? And here's this morning, and I got out in front of that's a good point. Well, if you don't follow the plan, there's no good data to correct the plan. um, but yeah, last night, by the way, since I know you were there, Trip was too. So I lost $100 on gold trade last night while we were in class, we were talking, and I lost $100. And then afterwards, before I started recording, I think it was during the recording, I ended up flipping that around, and I pulled a little over $300 out of the gold trade last night somewhere. Yeah, it was right. It was right here. I was wondering if you guys were going to be here. So right in here, I don't know if you can all see that, right, where the Bollinger Bands are pinching. It looked like I thought this thing would retrace, right? We had a nice solid run. I thought it would retrace some, put on a short trade, just risked $100, and it ended up stopping me out when it ticked up here. Well, this rally, and Will say, don't chase it, don't chase it. I'm like, I know. But I appreciate the advice because it is good. Well, I waited for it to pull back a little bit, and I'm looking at it and go, well, 2,400 is a round number. It's pretty solid. It'll probably pop from there. And sure enough, I put a little order just above the high of that candle right there, and it popped and hit it. And I ended up, this little run right here that was 20 or 30 minutes long, ended up pulling 305 or $320 out of it. So yeah, that was kind of cool. And I was debating whether to put weight in overnight, but I said, nah, I'm gonna sit on it. I pulled a little bit out of oil later too. But then this morning, you can see, here's 6 a.m. I usually am up about 5 or 5:30 and in front of the computer by 6. And I'm looking at gold. I'm going, this is looking pretty solid. And ended up, it went crazy this morning, right? Just like, whoa, 24. I had a little order above here, plucked a little bit more out of it. It ended up stopping me out with just a little bit, which here's where the woulda, shoulda, coulda comes in, right? Because that big candle, let me blow this up a little bit. It was on this breakout where I got in, but then it's so volatile, and I have a trailing stop on it, that sometimes it runs up and then it stops out. And even though I make a little profit, there's still a lot to be left on the table, which is irritating. So when you get in really volatile periods, you've either got to loosen your stop or you've got to accept, what can be a little bit smaller profits. And unfortunately, that happened in this case. And I wish I would have loosened the stops up a little bit, and there's the woulda, shoulda, coulda. And I fight it every day too, because this thing took off, and I think I got stopped out at 20 or something like that, plucked a few points out of it, which is fine. I mean, that's my ultimate goal. If I can get 10 points a day out of gold and 50 cents to a point out of oil, those are the two futures that I trade. That's all I watch. And that's my goal, is to hit one of those two each day. And sometimes I hit it, sometimes I don't. In fact, more often than not, I don't hit the targets, but I still come out okay because I've got those trailing stops. So if it moves a little bit in my favor, my risk reduces as it rallies. And so I usually have very small losses, and I have mediocre wins, right? I'm getting base hits, base hits, maybe a walk, a little strikeout here or there. But for the most part, and then, once in a while you get a home run, and that's essentially what I'm looking for. I'm looking for base hits, doubles, singles, strikeout, a walk here or there. And then sometimes it moves really fast and hits, which it did it last week, like 10, 15 minutes. Boom, $100 of risk, $300 of profit in like 10 minutes, which futures are highly leveraged. So if you've ever traded them, But it was frustrating because I'm getting stopped out here at like 22, and an hour later it runs all the way up to almost 48. That's another 24 points, which is massive. Even with a little tiny risk, little tiny position I had on, if it would have stayed in, that would have been like $700 or $800 in another hour. And then it turns and just starts diving. And I actually tried twice here after it rallied like this up here when it had this shadow. A mean reversion trade. If you're not familiar with mean reversion, is okay, things are outside of the mean. In other words, it's run too far too fast, and it's most likely going to revert back to the mean. And moving average is one thing you can use for that. Well, when things get too far away from the moving average, it often will revert back to the moving average, right? So when it popped like this up here and it kept going, I ended up shorting it, but I was a little bit too early, and the stop was a little too tight. So I got stopped out, gave $100 back. I'm like, okay, that's irritating. And then 5 or 10 minutes later, it pops again. And I'm like, man, this thing's just way too far. And so I swing at it again, right? Step back into the batter's box. I reset my mindset, like, okay, let's try this one more time. Throw $100 at it. Boom. Stops too tight, it runs and hits it. I'm like, ugh. So I gave $200 back. And it was frustrating. And here we are 30 or 40 minutes later, it runs up and hits this, 2048. And now I'm a little gun shy, right? Even though, again, I'm good at resetting my mind, but I'm sitting there going, is it really going to go this time? Or am I going to get hit again? I don't want to get hit a third time in a row. And I decided like, okay, now I'm going to leave it. And then this is what it does. It just bleeds. And we're talking massive. I mean, it hit 2448. And 25 minutes later, it's at 24-11. It's 35 points. Even on a measly little 3-contract micro trade, that's $1,000. That's not bad for 25 minutes, right? And it's still going. And you see now it's 23. It's literally down 60 points, which is, 3 micros, that's $1,800. And so that woulda, shoulda, coulda, like, I could have made a fortune. But then I have to ask, okay, did I make a mistake? Did I do something wrong? Did I do something wrong on any of these? Did I do anything wrong on the one last night? No, I didn't. It cost me $100. But then I reset and then re-entered, made a trade that went well, ended up coming back. This morning, hit one just right, made a little bit, was cranky, reset my mind, go, okay, well, it's run a little bit too far. And then, it's get hit for 100 here, hit for 100 again. And they get cranky, like, But this, at least we have a shooting star, right? We had, and on the tick chart, there were some indications that we were overextended. It was going to pull back. So I had some signals that said, now's the time to short it. So I did. It didn't work out. Look at this up here and tell me you see some kind of signal that says, I don't see any, there's nothing at all there that says this thing's going to tank 60 points in the next hour and a half, 2 hours. There's no indication there that that's going to happen. And so I have to, in my mindset, I have to sit there. And even now, I'm sitting here just cranky as can be because that's literally 70 points. It's just nuts. And you don't get moves like this. This is a once a quarter, once a year type of move. That kind of a move. And, I'm sitting here going, I had a chance at a home run, but realistically, I didn't because I didn't know that was coming. And with all the momentum and all that was going on here, with everything that's taken place, there's no reason to believe it's going to make this move. So if I would have pulled the trigger up here, this move, especially if I would have held on for the whole thing, which I probably wouldn't have, would have been just pure luck. That's all it was. It's like the guy at the blackjack table. That's why I brought that up. This is that $3,000 hand that he had that was just pure, wild, unadulterated luck. That's all it was. There was no skill in what he did whatsoever. The smart move he made was getting up and walking away. That was a skillful move. But having that massive win, like I'm sitting here watching right now, going right past me, that I could have won that huge hand. Well, I didn't. And you know what? That's okay. Because I'm not in this. I mean, sure, I love home runs. Who doesn't? And that right there, you can see right there, that's a massive home run. And Oil did the same thing. And actually, I had the similar thing there where he had a little kind of a head and shoulders type of pattern. It wasn't that great, but this kind of a bleed was not expected, at least not from me. At least the charts didn't indicate that was going to happen. And you can see here on the 4-hour chart, there's the 4-hour chart, that huge candle. I mean, there's not, that is highly unusual, and it's still going. Now, what I will wait for, and man, the volume was just massive. So obviously 2450 was the profit spot for gold for a lot of people that trade gold or own gold. And realistically, it was, you got to remember, it was 2000 just 6-7 weeks ago. So it's up 20%. For gold to run 20% in 6 or 8 weeks is huge. So in some ways, we could have expected this, but usually there's some kind of reversal, some kind of indication, some kind of pattern that shows up. This says, okay, we're done. We're exhausted. We're tired. And, we could look and say, well, that shooting star was one indication. And it was one little piece of a 500-piece puzzle. Are you going to bet on one piece of the puzzle? I mean, I'm not going to. What about oil, though? Is oil going to keep going? Look at oil. It's getting there. Well, yeah, CPI is what caused gold to rally big time. Well, there's a lot of underlying things that's caused gold to rally. A lot of central banks are buying it up. And now part of the reason oil and gold have popped is because rumors of, there's chatter now of Iran attacking Israel. So, when that happens, then people start to speculate. And whether it happens or not is a whole different ballgame. But it's that's definitely part of what drove oil and gold higher. So I don't know if news came out and that speculation, that idea that that's going to happen, maybe got squashed. I don't know. I don't rely on that. I don't watch. I mean, I watch the news, but I listen to it, but I take it with a grain of salt and understand they're finally talking about gold, but what it's going to do next is hard to say. And I will wait, even though I sit here and kick myself and I'm frustrated. And even this little tiny hammer we had here at 24, because 24 was a good support. I even thought when it was falling, because I saw that it was right before. Well, I guess that was about a half hour before we started. I'm like, man, if it hits 24, there's probably going to be some buying coming in there. That was my thought. And sure enough, it did. It ran 16 points in like 5 minutes. Like, man, I could have plucked my 10 points out right there. But that also, takes a lot of guts when things are just falling off a cliff like that to do that. To pull it when it's falling like that takes a lot of guts. And sometimes I do, sometimes I don't. I did it over here, and that's the thing. I was a little gun shy because I pulled the trigger here twice, and I missed. So, and again, no matter how long you've been doing this, that mindset still is going to stick with you. It's a matter of resetting it quicker, which was the point of today. So, even I, like I said, even I have to fight it, and you're going to. It is the nature of how trading goes. So, gosh, do I pull the trigger on oil if it breaks that level? Yeah, Brenda, kind of. I mean, engulfing patterns tell us that the tides are shifting. But remember, and I'm pretty sure you've been through patterns of flash, that the term reversal when it comes to patterns is a misnomer. It doesn't mean that it's going to tank. It means that the trend is changing direction. That's it. So we had a massive upward move. And even though this wasn't technically an exact engulfing pattern, but it's close, we could have treated it that way. It just is an indication that the uptrend is probably over. It doesn't mean it's going to turn on a dime like this. That's one reason I say that it's not, even though it's really close to an engulfing pattern, it still is no indication that this is going to happen, this massive bleed that we had. So that's where that's why the whole thing is tricky, right? It's trading is massively challenging because of that. You just don't know what's coming. And even though we have patterns and we have things that can put the odds on our side, we still don't know. Hence the reason we use risk reward. Yeah, I do that quite often. In fact, that's what I did these two times. On the ones right here with this, I mean, I don't know how well you can see. I know it's really small, but we had that big, huge pop, and I'm like, this thing's way too overextended. I pulled the trigger and had to stop just above the wick, and boom, it took off. And then as it rallied again, I'm like, you know what? I still think this is too far. I'm gonna take another swing at it. Strike two. So, I mean, even though I'm talking about the mindset and correcting your mindset, I still get gun shy. And it's natural. That's what's going to happen to you too. No matter how many times, I mean, you keep pulling the trigger and you're like, and you start to second guess yourself. And that's why, confidence, making sure that you don't destroy yourself by taking huge losses, because it's a confidence thing. It really is. And you'll notice, you'll pay, if you pay attention to how you're feeling, then you'll notice that when your confidence level gets shaken, you're like, eh. And an important thing to do is when you recognize that and notice that your confidence is a little bit bruised, maybe step back, just stop trading. Get out. You don't have to be in the market all the time. You don't have to constantly be trading. In fact, if your confidence is shaken, then you're probably going to make stupid decisions. In poker, we call it on tilt, right? If you make a stupid decision, you take a bad beat in poker, they call it going on tilt, which means your emotions are frayed and you start making stupid decisions and you play hands that you shouldn't be in. and you're starting betting, if you can't think straight and you can't make good decisions, then get out of Dodge, leave. I remember learning that. I was 18 or 19. I was playing poker. I got beat on 4 of a kind. And it's like, what? How do you get beat on 4 of a kind? Well, a guy had a higher 4 of a kind at the end. And I'd lost all my money. And I went to the ATM and got some more. I came and sat down in about 20 minutes. I'd lost it too. And the guy I went to high school with, he was there too. And he gets up and follows me out as I'm leaving. He goes, I wanted to say something, but you already sat down. He goes, man, you take a beat like that, you get out. You were on tilt. He goes, it was so obvious you were on tilt, it's not even funny. I'm like, on tilt, what do you mean? Oh, okay. And that's when I saw it. My emotions weren't there because I'm just sitting there. I'm already dreaming and fantasizing about this massive pot. I'm going to win because I got 4 of a kind. I had it in the first 5 cards. I already know I'm going to win this pot. And then I lose. It's like, maybe some of you have done that trading, right? You get into this trade, you're certain it's going to work out. And it might even start to work out in your favor, and it's going in your favor, and you're making money, and then bad news comes out and it gaps down, and you're like, ah! And you went from making money and fantasizing about this huge profit you're going to make to now you're getting beat hard. And that is going to absolutely frazzle your mind. No matter who you are, that's what's going to happen. I don't care how good you are, that's going to happen. The best of the best, look at pro athletes. It happens to all of them. Everybody has moments like that. It's going to happen. And if you're really frazzled and you're really beat down, your confidence is beat down, then step away for a little bit. Regroup, reset your emotions, get yourself back where you need to be, where you can make good, solid, calm, cool, collected decisions. And just chill out and wait. I mean, I've stepped away from the market for 2 or 3 weeks at a time before. Because if I make a series of really stupid decisions and I do something dumb, it's like, okay, that was dumb. I'm just going to get away from it. I literally won't even look at the market for a couple of weeks. It's been a while since I've done that, but it's important to know where you're at all times and adapt and adjust accordingly to where your emotions are at with regard to trading. It is one of the reasons that risk reward is so huge and why scaling is so huge. I'll give you some examples. We'll get to some charts real quick. Where'd it go? There it is. Some that I'm in. I mean, here's the candidates in the Weekly Whispers that we're trading. This is the Weekly Whispers account. And so there's Abbott. It's upside down a little bit. Well, Starbucks is one. This was originally I had a nibbling spot, and this is why I love scaling. So Starbucks has got this descending triangle coming in. It's starting to look good. Everything's setting up, and we'll identify the pattern back in here when it's forming. If it breaks that 90 level, then the next target is about 80. So I actually had, originally, I don't remember exactly where it was, but it had a what I call a nibble spot, because if it breaks that 90 level, the odds are it's going to keep going. So I picked up just 200 shares, somewhere around there, just below 90. I don't remember what it was. It's already closed out, actually. I took profit on that, 200. So I picked up just a couple hundred shares, a little tiny bit of risk, which I can look at now, and as from a mindset perspective, it's 200 shares, right? 2 contracts. If I'm trading options, 2 contracts. Same thing. And so if it stops up, if it backs up against me, I've got about $2 of risk. Okay. 2 contracts, 200 shares. I'm looking at $300 or $400 of risk. In the big scheme of things, not that much. $300 or $400 is no big deal. But if it continues to move in my favor, then guess what? I'm a little bit ahead of it. And that's sure enough exactly what it did. The next day, Starbucks hit that entry point, the 88.69. It hit that one, added 1,000 shares to it. So now I've got 1,200 shares, 200 of them already profitable at the entry point. So I'm already up. I'm already profitable here. And then a couple of days later, when it comes down here, I'm like, you know what? I'm going to bank that $200 of profit. I ended up moving the stop down. I now just today moved it down to here where it's at. I originally moved it down to just above break even. I think I had it right above that 88.69, like 87.02 or something like that. And then I'll just move it down every day to where it makes sense. And I'll keep trailing it. And actually, I just had 1,000 shares, right? So originally picked up 200 just below the 90, added 1,000 to 88.69, closed out the 200, took the profit on those 200 shares. So I've banked a little bit of profit. So now even if it backs up against me, I've already banked some profit. That's okay. I'm good. And if it keeps going, then I still have 1,000 shares sitting there. And then this morning, I'm like, you know what? This thing's already about halfway to the target. I'm going to take about 40% of it off. The volume's not huge. It's not accelerating. We got earnings coming up. So I'm like, you know what? Let's bank some profit. And the size of how much I take off depends on how quickly and how fast it's moving, what it's doing. There's a lot of momentum. And in this case, it's already made a pretty big move. The odds of a short card rally or some kind of bounce back from here is increasing. Every single day it drops, the odds of a retracement back to the upside increases. So I calculate those odds in my mind. I'm going, okay, how much of this do I want to take off the plate? How much profit do I want to bank? So this morning there was 1,000 shares. I banked 400. So I took 40% of the trade off the table, moved the stop down to here. So I've already banked, I don't know, what was that? 85, about 4 points on 4 contracts. So $1,600 plus probably $500. So I've got about 2,000, 2,500 of profit in this right now. And a stop here at 86.44. So if it backs up, I'm still profitable on the rest of it. So I'm going to bank about $5,000, $6,000, $7,000 of profit on this Starbucks trade by just nibbling a little bit and then adding to it and then moving the stop down as it moves. So, and taking out parts of it. If it continues to fall today, I might take the rest of it out, depending on what it looks like. It's all based on what the conditions of the market are. So that's a good point, Will. I just saw that comment. There's no pro athlete that doesn't have a coach. They all do. The best of the best do. Jordan had a coach. Tiger Woods has a coach. Everybody has a coach. So don't discount that. Always, 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 it's good to have somebody that can point you in the right direction, especially when you get frazzled and you have something happen. You're like, freaking out. I just noticed something just hit. What? Some trade just hit. Oh, actually, I moved that. Oh, X-ray. That's right. So exactly, Will. Will just said this, so you don't have to take my word for it. Scaling is a good mindset booster. Thanks for that. So the risk reward and scaling are two major things that when I started utilizing those two tools, it really shifted my mindset. And I'm just showing you an example of what I'm doing on Starbucks, and that's exactly the way I trade. And as you can see at this moment right now, this account is up 20 grand, which actually is just, we were underwater on this about 7,000 3-4 weeks ago, 5 weeks ago. So we've put about $25,000 to $30,000 of profit in the last few weeks of this, because it's been kind of a stagnant. And you say, well, that's $1 million account. We can only trade stock on this. This is a practice account right on Omega charts. We can't really do options on it. So I had to do something that mimicked options. And options, generally speaking, you get about a 10-to-1 leverage. So it's like, how do I create an account here where I can mimic the options trading? And so I had to make it 10 times bigger, essentially. I'm also mimicking this on toss, and that account shows up 19,000. So it's basically the same. So it's mimicking, because on toss, you can set a practice. So I basically duplicate what I do in this on toss with a $100,000 options account. And that one's up 20 grand, right? 19 grand is what it says. That's what that other machine is there. That's my play machine. This is my trade machine, the one that I'm on. So, yeah, I mean, that's 20%. Something just hit. Oh, we just bought puts on McDonald's. Now, don't do this. Well, I mean, you could if you wanted to, but there's McDonald's. We actually had a little descending triangle, same as Starbucks, right? And we captured this little move right here, scaled out of it, put the trailer, move the trailers down. And it ticked it out here, but I'm looking at this going, we have that resistance. It's hitting it. And we got a lot of momentum. We might have another leg to the downside. It literally just triggered. I don't know if you heard it. It went, ding. That's the practice account, the Weekly Whispers practice account that's up 20 grand. And if McDonald's goes down, I think it's just 3. I think I just did 3 or 4 contracts, because my max is 10 grand. Can't do more than 10 grand. Don't trade more than 10% of your account in any one given trade. God forbid it blows up on you, then you lose 10% of your account. That rarely happens anyway. So you only have, 1, 2, maybe 3% at risk at any given time. But that's the maximum I'll put in, is up to 10 grand. If the trade looks really good, I'll go up to 10. I don't go that heavy even. I usually only have like half. So when you say there's 20 grand of profit sitting there on a $100,000 account, That's really only deploying 50 to 75,000. It's very rare for me to have 80, 90% of it all invested. So you're talking using half, maybe 2/3 of the account, and we're up 20% this year alone so far. And if this market continues to bleed, considering that I have a ton of, well, you can see it. Those are all short. There's not there. I did have a long position earlier. It must have got stopped out. Oh, ADI got stopped out. That's right. That was a bullish position. But if this market continues to tank, that number is going to be 40 grand here in a week or two if it keeps going. And Tesla, actually, this was up 12 grand last week. I'm kicking myself. I'm like, I should have pulled it out down here. But how do you know? You don't know. You don't know it's going to do this. And in 2 days, it rallied back up. But if it keeps going, and we got earnings coming, so I'm accounting for that. But and I should have scaled out a part of this. That's definitely a mistake I made there. I should have taken half of it off the table. But it didn't. So right now it's like, okay, it's still okay. I'm just going to let it be and we'll adjust it from here. So anyway, all right, I'm over. I got to run. Holy cow, 6 minutes over. I thought it was only a couple over. So thanks, Lee. Any real quick questions? I didn't miss anybody today. All right. Yeah. Earnings. We just started earnings season this morning. So, and it's going to be wild and crazy. It's going to be a wild ride for about 6 or 8 weeks. So, yep. What was my number 2? What do you mean, Barry? Trying to think of the context of what you're referring to. Two items. I'm trying to think of what you're referring to. Help me out. 2 critical questions on the PowerPoint? Oh, 2 critical questions to ask on each trade? Yeah. Do you have a plan? And are you sticking to the plan? I think that's I'm assuming that's what you're referring to. If you have a plan going in and you stick to the plan, if you answer those 2 questions, yes, then it was a good trade. I'm thinking that's what you're referring to. Oh, yeah, okay. Well, I guess there weren't 2 critical questions. There's 1 critical question. I think that's a typo. Or my mind was thinking 2 things, yes and no. Because I think I was in the mindset of a good trade. A good trade is, did I have a plan going in? Did I stick to the plan? If the answer is yes, it was a good trade. Oh, you must be an engineer. Detailed question. That should say 1 question, 1 critical question, because I guess that's all there really is. So no surprise. That's not a bad thing. Just don't let it hamper you, because even though I'm not an engineer by training, I think that way too. So you've got to, and that's one challenge I had, is learning to loosen up and let. And probably one of the best things you can think of, and it's one thing that helps me reset my mind, is I think it was either John Murphy or Steve Nissen said it. I think it was Steve Nissen, the candlestick guy. Right? He said support and resistance lines should be drawn with a crayon and not a pencil. Right? And as engineers, you want everything spot perfect down to the penny. But in trading, in the market, there's got to be some wiggle room, right? There's lots of people that are contributing to what this thing is doing. So you got to give it a little slack and let it move and give it. So draw your lines with crayons, not pencils. So, and that was a hard part for me to get my mindset over, is because, like I said, I'm not an engineer, but I think that way, very detail oriented, like right down to the penny. I was doing everything, and all of a sudden I'm like, okay, back off a little bit and give some things a little room to breathe, if you will. So yeah, I guess it's just 1 critical question. Depends on how you slice it, but yeah, that's basically it. So, okay, good. Thanks for that question, getting clarity on it. All right, I got to run over. So y'all have a wonderful day and a great weekend. And we'll see you hopefully very soon. Y'all take care. God bless. Bye-bye.